Here we are, MMTs. We're here to talk about the weekly Google chart once again because Google had a liquidation on it today. And those liquidations come from clearinghouses where people get margin calls by forced selling. We had a little bit of that across the board. We had some of it in Apple. We won't go into great detail about that, but the MMTs know where that came from and how it was manufactured. Now, outside of all of the headwinds that this trend has gone through, we're going to talk about the key specifics of it and why is it so good. Google has lived up to its trend. And how has it done that? It had the weekly breakout above all key moving averages. Once again, even though that the stock is being liquidated, the reason why some of the public analysis readings, such as a higher MACD at 9.4 versus 7.2, and these are weekly buy signals. Even though that the stock, the reason why is you've had a 4-week consolidation to the original weekly breakout. You've had all of the weekly moving averages, such as a 10-week rising in value, so it went from a bear trend to a bull trend. You've had the higher weekly area. You came right up here to one of our targets that we talked about last week of how we were going to get to this high. And we got there. We got right up here to this on the first pass. Today is Thursday. Today's date is 11/10 of 2011. And you have part of the weekly events are, one is that there are certain firms that have to liquidate certain stocks because they messed up, and they always own stocks like Google and Apple and some of the higher quality breeds. Once the liquidation gets over, because the trend is strong, we look to see that these key weekly bull longer term structure turnaround stays in play. With all of this happening mathematically is that you're above the 50-week. I mean, my goodness, we stayed below the 50-week moving average over here. 1 week, 2 week, 3 week, 4 week, 5 weeks, 6 weeks, 7 weeks, 8 weeks, 9 to the 9th week. But it was 2 months that it traveled below that pink line. And then you turned on the 10-week again and went down, and you could never get the closing qualifier of 4 weeks above it. And we've had that qualifier. And we have that weekly buy signal. The thing that remains over it is not the name itself. It is the market. It is the contagion. It is the fear that is also part of this distribution in the shorter time period. And that when the trends are this strong on a longer term structure, the longer that what we have to do is we have to close above here tomorrow. And that's going to be that 599.66 area. Okay, we got to consolidate above this area so that we can break back above here. And that's at about 625, 626. That's that top over there. Now, the thing about this particular weekly area, if you take a look at it carefully, you can tell that these wicks down here, if I take this half bar, weekly half bar, right about there, that's exactly where those moving averages are. Now, notice that these weekly levels right here, they're still ascending in value, and they're very narrow range week from bottom up last week, and today being Thursday with the Italy involved, and then the markdown in the stock on margin calls that are being met for people that got overextended, certain kind of firms. The thing about it is we remain right here. As we get closer, the body has to go back above the shorter term trend line here. Okay, the strength is still in the name because of the mathematical technical readings at standard, by the way. But however, it builds the strength in something when it's changing. And it's been in its changing process. Whereas before over here, you were just crossing above the weekly moving averages. These key weekly moving averages right here, let me take out the trend lines for you. These key moving averages, the blue one is a 10-week. That's a 50-week. You've had that bullish crossover, and you got a rising 10, and you got the 20-week rising as well. And no matter what happens is, yes, they're always the benchmark of support level. However, the buyer and the seller from this period of time, from 1 week, 2 week, 3 week, 4 weeks, this is the fifth week. So we know we made that high and we got up there. We also know that this weekly bar here, that we have to consolidate and close above 633. We were on the high with a gap to 605.95, and then even though that we have a slight positive tape on the day, the high beta cap names were being sold because there was liquidation, not being sold because Google's a bad company or Google has bad fundamentals. We all know that's not the case. But in the shorter term, the pullbacks are viable and will be viable, and monies will be made because the overall 5-week trend, this trend has built some momentum now on the weekly moving averages pointing upward, and they're rising the 10 and 20. And you are above both the 10 and the 20 is above the 100 week, and you can see that clearly. That's very bullish for Google. So outside of market manipulation and worldwide events and forced liquidations, it still remains a very strong trend. That will not change based on the evidence that I have presented here now. And that when you look at buying good quality that have totally changed trends as they have, remember, you have to have 4 weeks above the 10 week. It has to be rising to meet our qualifier, and it has. And so the 20 week has been rising the red line as it has. And they're both crossed over, and the 50 week and the 10 and the 20 week are very, very, very approaching each other. The 10 week moving average is 560, and that 50 week moving average down here, the thing that we want to know is that that's at 564, and the 10 weeks at 560. It only has to go $4 more in this rising 10 week to cross above that 50 week. And then at that point in time, should we go that way, we would have to have more buyers and sellers in a 5-day period to make sure that that keeps rising this way. Then the trend in the stock is going to be even substantially stronger on pullbacks. And that will be how it will be traded. The best way to trade it right now is to let these shakedowns and these events get out of the way and just look for the lower prices and kind of go hunting where marking down below the market, and we're going to have to mark out all the risk. But it still will remain strong, and there is plenty of time in here to get the right pricing in control at the right dips. It will come, and the trend is strong. That's the weekly analysis. There's the 50, there's the 10, there's the 20, and there's the 100. And here's the ascending weekly buy signal. You couldn't ask for any more. Not only that, when you've got the rising percent DS up here above the slower percent DA, that is good as well. However, even though that we do make rallies up, we're going to be forced to buy puts below the market. Because irrespectively, when the trends are this strong, changing into a bull trend from an old bear trend as it was, is that you don't need a lot of put protection at that time. You always need the put protection when the trends are doing this. When you're rolling over in weekly moving averages, these are bear trends and these are short trends. Yeah, you'd have to have a lot of. You wouldn't even want to be trying to buy and hold it. You'd be short all the time. And you're going the opposite way with the weekly moving averages, and that's how you go down in prices. But then it changed. And yes, it did get 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks above. There was 4 weeks above it, and it was rising, and it met a qualifier in here. But remember, that was up here many, many weeks ago. This was in the period of 6/26 of 2011. And it went back into a bear trend, and it did, because it got back below the 10 week, and it stayed below it. When it sold back below it, it stayed there for a number of weeks. We don't have that case in this trend right now, because that's rising. This is rising, and even the lower band that people use mathematically, robots use them, but they're pointing up in value. They're not pointing down. Don't pay a lot of attention to Bollinger Bands. I'm just letting you know that shows strength in a public view, in a public technical model. What I will say is that we will have to get aggressive on the short side of the market. We just need to consolidate. And you can have weekly consolidations before huge breakouts follow. And if you break the consolidation, you can come all the way back down here, and it's possible to test these moving averages. We won't take our view off of that. Okay? Right now, people around the world and fund managers that are underperforming are not outperforming. This is a perfect name for them to own. It goes higher. And the thing about it is there's some obstacles in the way with the market in the month of November 10th of 2011. So we're going to keep our eyes very carefully on it, meaning that if we have to make adjustments, we certainly will. And we'll make them accordingly to adjustment of risk market volatility versus the underlying asset, Google, and the trend of Google, the underlying bull trend that we have. That is one picture. The other picture, though, that we have to address and look at, and we'll continue to look at, is how does this market volatility with worldwide events and people, fund managers, or certain liquidation curves, we're in it today, is how does it rebound tomorrow? They always need to rebound. And how is that sentiment changing, or is it? Right here, it's awfully strong.